Hey everyone, welcome back to Corporate Decoder, the place where we dissect those dry sec filings and find the juicy bits. Today we are diving deep into Lexaria Bioscience Corp. Its latest annual report. They are all about this dehydratech drug delivery technology. Let's see if it is a game changer or just another science experiment. Before we dive in, if you appreciate getting straight insights from corporate documents like this, make sure you're subscribed. And hey, stick around to the end because we'll give you our take on whether Lexaria is a buy or a sell, and if you want to join our community, don't forget to check out the Discord link in the description below. We're building a great group of people there to talk markets and all things corporate. Alright, first things first, you know how insiders sometimes sell stock based on pre-planned trading arrangements? Well, Lexaria is telling us that for 3 months ending the 31st of August 2025, no director or officer actually put one of these fancy rule 10b5 to 1 trading arrangements in place or got rid of one. So no big insider moves there to report. Lexaria Bioscience Corp is a biotechnology company. They have this patented dehydratech drug delivery technology. Think of it as a coating or a special way to mix active drug ingredients with oils. This special mix helps the drugs get into your bloodstream better and faster. This means they can use less drug and maybe have fewer side effects. They say it works for lots of things like diabetes drugs, vitamins, pain meds, even cannabis and nicotine. Now let's talk patents. Lexaria has been busy. They have a whole bunch of patents granted worldwide, mostly in the US, Europe, Australia, and Japan. These patents are all about their dehydratech technology and how it improves the delivery of different active molecules. They seem to be focusing a lot on GLP-1 and GIP drugs for diabetes and weight loss, and also CBD for things like heart disease and epilepsy. They even have patents specifically for its use with cannabinoids to help treat epilepsy. Back in 2019, they published a study that showed their dehydratech technology delivered more CBD into the bloodstream faster than a regular form. This was a big deal for them, and it really pushed their research forward, leading to several more human studies for high blood pressure. When it comes to research and development, Lexaria spent about $8.2 million in fiscal 2025. That is a huge jump from the prior year when they spent only $2.3 million. This big increase seems to be because they were running several human pilot studies and even a chronic human clinical trial in Australia. They are definitely investing heavily in proving their technology. These studies are pretty detailed. For instance, one human pilot study compared a dehydratech semaglutide capsule to Rybelsus, which is an existing oral semaglutide tablet. The results showed that the dehydratech version kept higher levels of semaglutide in the blood, had a faster peak drug delivery, had fewer side effects, and even lowered blood glucose levels more. That sounds pretty promising if true. They also did a long-term animal study with rats. They tested different dehydratech formulations of semaglutide, liraglutide, and CBD. The dehydratech, liraglutide, and some CBD formulations were actually better for weight loss than the semaglutide ones. Interestingly though, in those animal studies they could only detect CBD in the blood, but not semaglutide or liraglutide, which was surprising given the positive results they saw. They suspect there might have been an issue with how they could measure those drugs. Now let's get to the nitty-gritty, the numbers. For the year ending the 31st of August 2025, Lexaria reported revenue of $705,923. That is up from $464,278 the year before. The vast majority of this revenue comes from licensing their dehydratech technology. They are seeing growth in licensing fees, which is good, but they expect this revenue to drop in 2026 because a key license agreement ended. But here is the kicker. Even though revenue is growing, their net loss also grew substantially. In fiscal 2025, their net loss was over $11.9 million, a big jump from about $5.8 million in fiscal 2024. This is mainly because their research and development expenses shot up dramatically, as we talked about. Looking at cash flow, things are tight. They used about $10.5 million in cash for operating activities in 2025 compared to about $5 million in 2024. They raised about $6 million through selling more stock, which helped, but it means more shares are out there diluting existing shareholders. They explicitly state that there is substantial doubt as to their ability to continue as a going concern. Basically, they are burning through cash and need more funding to keep going. As for their assets on the 31st of August 2025, they had about $4.1 million in total assets. Most of that is in cash, which is good, but it is shrinking. Their total liabilities are around $1.5 million. The big picture here is that their cash position is dwindling, and that loss from operations definitely makes you raise an eyebrow. This going concern thing is serious. It means the people preparing the financial statements have doubts about whether the company can keep operating for at least the next 12 months. They have recurring losses, negative cash flows, and are burning through cash fast. They have raised money, but it is not enough to cover their planned expenses. They say they need more funding or strategic partnerships, and if they don't get it well, they might have to liquidate assets, which is never a good sign for investors. Lexaria has an equity incentive plan, and they've been granting stock options. In fiscal 2025, they granted over 586,000 options to their executives and consultants. The total number of unexercised options outstanding at the end of 2025 was over 1.4 million. All of this stock base compensation is a cost for the company and contributes to their losses, but it is also a way to attract and retain talent. Let's talk leadership. Richard Christopher became CEO in August 2024. He's got a background in biotech and medical device companies. Before joining Lexaria, he was CFO at In Vivo Therapeutics, which unfortunately filed for bankruptcy in the end. That is a bit of a red flag, but he also has experience at other public companies. John Doherty heads up science and operations. He has a lot of experience in pharma and biopharma. Michael Shankman is the CFO, a certified public accountant. Christopher Bunker is the chairman and was CEO until August 2024. He has been with the company a long time, guiding its shift into biosciences. Looking at who owns the company, as of November, 2025 directors and executives together own about 8.4% of the company. The biggest chunk, about 17%, is owned by Armistice Capital LLC through warrants. It is important that a significant portion of ownership is with institutional investors, and insiders can signal confidence. But when insiders own a small percentage, it sometimes means they are relying on external investment. So what is the verdict on Lexaria Bioscience Corp? Its latest report: on one hand, they have a patented technology, dehydratase, that shows promise in improving drug delivery. Their R&D results look good, especially for some of their weight loss and hypertension programs. They are also securing patents, which is crucial for a biotech firm. However, the financial picture is concerning. The company is burning through cash rapidly and has substantial doubts about its ability to continue as a going concern. Their net loss has widened significantly due to heavy R&D spending, and they expect that to continue. While they have raised funds through stock sales, this dilutes existing shareholders and doesn't solve the fundamental issue of generating sustainable revenue. The big jump in R&D is exciting, but it comes at a significant cost with no guarantee of immediate returns. The company is in a highly competitive industry facing big players. Their success hinges on getting their technology approved and commercialized, which is a long and uncertain road. The risk factors section paints a clear picture of the challenges they face, from regulatory hurdles, competition, and the need for continuous funding. In conclusion, Lexaria is a speculative bet. They have a potentially disruptive technology and promising early results, but the path to profitability is long and uncertain, and the immediate financial health raises serious questions. If you are an investor, you need to be comfortable with high risk and believe in their long-term vision. This is not a company for the faint of heart. Alright, that's our breakdown of Lexaria's latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives into corporate filings. And most importantly, don't forget to check out the Discord link in the description. We have a growing community there discussing these kinds of opportunities. Thanks for watching. See you next time on Corporate Decoder.